BlackRock results out this morning. The world's largest asset manager posting a 6.5% drop in quarterly profit. Among the reasons, its investment advisory and securities lending revenue fell. Costs rose. Also, taxes were up, too. Joining us right now is BlackRock CEO Larry Fink. And, Larry, good to see you.
Hi, Becky.
Thanks
for
coming in.
Good to see
you.
You lay out pretty clearly in the release what happened. There was a slight decrease, 3% decrease in earnings per share year over year, lower operating income, and higher taxes that were partially offset by what?
Well, we had $151 billion of inflows, record amount of inflows, of which $87 billion was institutional and $73 billion was active. It was
and
probably.
We should point out, too, $6.8 trillion with a T in assets under management right now.
And year-to-date assets are up $866 billion.
Why?
Well, markets are higher, and especially markets are higher in the United States versus elsewhere. I mean, one of the key things about the quarter, our average assets for the quarter were $200 billion lower because of the market swoon in May. And obviously came back all the way. But probably one of the more interesting points about how I want to frame everything is 10 years ago when we bought BGI, about 49% of our business was in the U.S. And one would have thought 10 years later, as the world got healthier and bigger and broader, you would have thought that that percent would have shifted downward a little bit. Mm-hmm. And right now, it's about 66% U.S.
Wow.
So, and that's just telling you how much market beta has been in the United States versus the emerging world. Mm-hmm. In the second quarter, we saw that very large because we had emerging markets were down 7% for the quarter, and yet S&P was up approximately 7%. So we had a lot of divergent beta. And we saw a lot of de-risking still. We're still seeing, we had $26 billion of increase in cash. So we saw people de-risking still, and I still believe, as I said last quarter, I think this is going to be a mistake. People are underinvested in equities. And I do believe with now the changes of tone of central bank behavior, and you're starting to see corporate earnings are coming in pretty well, we still are constructive on the world. We had great active flows, as I said. We actually had active flows in equities in the second quarter, which was very unusual. We actually raised a $1.6 billion closed-end fund in equities.
Yep. But you could never be a sell-side analyst because you actually said something last time you were on. You actually took a position,
right? And
I mentioned it earlier. Right. And I'll bet you got some flack, too, because the headline was Larry Fink predicting a melt-up, not a meltdown. And there's so many people that are sure that this is all artificially Fed-induced gains and that the fundamentals don't match up with the equities. For you to say that, you put yourself out on a limb and really stuck your neck out. Like I said, a sell-side analyst would be, wow, it might go up, might go down, could stay the same. They never say anything because their main thing is keeping their job. But I thought you probably got some flack for that, but you were right. And now you're saying it again,
yes,
which is significant. Even at these levels?
At these levels.
You still think there could be a melt-up, or at least maybe not a melt-up, but trending higher?
Markets are going to trend higher. I do believe if you wanted to frame where the market's going to be for the next 10 years, mm-hmm. I would be betting on the rest of the world will catch up somewhat to the U.S. when you see these big shifts. So much of the market gains have been U.S., which for good reason.
We deserve it.
We deserve it. We have better companies. We deserve it also because we did more fiscal policy than other countries. Other countries were heavily reliant on just monetary policy.
Right.
And I think that's going to be the issue. I know that we're all anticipating a change at the ECB. I hope Christine Lagarde actually pushes some of the governments to start focusing on more fiscal policy.
Is it definitely her?
I hope it is her. I think it's highly likely.
I'm not optimistic about her. Some of her comments in the past were, I don't know.
Well,
she's like elitist, globalist. I know.
I'm a globalist too, Joe.
I know. Yeah, but you appreciate the fiscal work we've done in this country, and yes. I don't think you're talking about it as Keynesian stimulus just throwing money at something. You're talking about deregulation. You're talking about even tax reform and all these things. That's what you mean by fiscal, right? You
well, I also believe fiscal policy is a better tool for more.
What kind of fiscal policy?
Let me just
infrastructure
or yes, no, but let me finish. I think fiscal policy does more for an economy than monetary policy. Monetary policy has limited tools. It monetizes financial assets.
But what do you mean by fiscal policy?
Well, let me just finish.
Okay. I just need to know. I'm
trying to help you.
I know. It's hard.
Monetary policy monetizes financial assets.
Right.
Bonds and stocks. The general population does not own bonds and stocks, especially in Europe and Asia, and I think this is one of the structural issues. 82% of savings in Europe is in a bank account. China, almost all savings is in a bank account. So when you stimulate the economy through monetary policy, it's not impacting the majority of people. So, but fiscal policy through some form of tax reduction, some type of redistribution through infrastructure, by creating jobs that way, that will lift more people in the economy. And I think this is one of the structural issues that we're going to have to live with. And, and I think this is why Europe has not been able to get out of its problems. It has been way too reliant on monetary policy. And when 82% of savings is in a bank, they have negative return now. Do you think that's going to stimulate more consumption?
Right. No. Well, we haven't done infrastructure here, so the fiscal policies
in it, right,
and the ones that have paid off were the former of what you talked about,
right.
And that's tax reductions,
right.
and things. Okay, so we haven't done that yet. That is one of the reasons why income inequality here has gotten worse over the past 10, 15 years, because the people with the assets, though not as bad as Europe in savings, there are 401ks here. There are some people that participate in that.
What is our savings? If Europe's 82% and China's basically everything, how much is it here in the U.S.?
So 82% of all their savings is in a bank account.
What is it?
We have much more. Europe does have pension funds that are much more, state-run.
Right.
But we have a much stronger, much better equity culture in America versus any other country.
Yeah.
And that is why U.S. stocks trade at higher PEs.
Yep.
So all the fundamentals for the U.S. means we'll have a stronger economy.
You talk about the central bank moves. Yesterday, John Williams, the head of the New York Fed, made some comments that made the markets think at least, that a 50 basis point cut is much more likely this month than 25 basis points. New York Fed came out and tried to talk that back a little bit afterwards.
Yeah, look, I don't see the Federal Reserve changing behaviors that rapidly by going to 50. They're incrementalist, 25, 25, 25, 25.
You believe 50? I mean, I can't believe they're doing it at all.
Well, we talk about the great economic numbers that are coming out time after time.
But the ECB is now talking about another rate.
And the yield curve, it's
55%.
We have to do this just because we no longer control our own destiny.
But also our dollar's going to get too strong, too, if we don't do it.
But that's just it. We're controlled by them, not us.
Well, true, but if they do, 55% of all European debt is negative yield.
Oh, man.
Getting back to this 82% of people's savings, it's only going to hurt them more. I actually believe, okay, I'm going to stick my foot out again, Joe, if the ECB is really going to try to re-stimulate the economy in Europe, they're going to have to buy equities.
Really?
That's what, just like the Bank of Japan has done. So I don't believe, now that's pretty, most monetarists would say that's terrible. But I actually believe that negative returns, negative yields harm the economy. They don't stimulate.
You're sticking your neck out again. I think when you stick your foot, that goes up. That's a mixed metaphor. I think
that's
Joe
collects.
That's wrong. I do love them though. So you're going to stick your neck out. Sticking your foot out, you're tripping someone. I think.
Well, maybe he means you.
Or putting your foot in your mouth is not what you want to do.
He does walk in the cake.
Oh, I love.
Don't
you love them? And people inadvertently do the best mixed metaphors. They're very good.
I've been guilty of it. He's
they're really good. So, but you did stick your neck out, and you're doing it again. I like knowing what you. Why would you know anything? You're managing $6.8 trillion. You can say something and then go do it. You can say what's going to happen, and you can leave today and make it happen. I would like to do that.
Yeah. I've been saying this each time I'm seeing you. We're in a unique position at BlackRock. Having passive and active in our risk management has given us a more holistic approach to our clients, and it's evident by our flows. Also, I didn't say 20%. We had a 20% increase in our technology business.
Right.
And so we are having deeper conversations, more holistic conversations, more outcome conversations with more clients, and it's showing up with these flows.
The other thing is that your revenue number's down, but that's partly because your fees are down. Explain that.
Well, you saw de-risking, as we said in the quarter. We had a lot of money going into cash. Average assets were $200 billion less. As you framed the original statement, security lending was down 18% versus a record security lending quarter last year. But also, that's reflective on the fears of the economy. You're seeing hedge funds de-risk, so their gross positions were down, and so they're not borrowing. And then more importantly, we're just seeing less and less M&A activity right now, and so you're not seeing people arbitraging. And so we did have this big reduction in security lending. Those are some of the issues that we saw from the reduction.
Just very quickly to emphasize this, I know you've said it, but for people who are kind of listening and not paying close enough attention, this should hit them over the head. Hedge funds are de-risking, other clients are de-risking, and you think that's the wrong move. You should not be in cash right now.
Well, no, I would not be in cash. I mean, if you're going to do anything, put your money in a long-dated. I've been saying this for years: a long-dated mutual fund or ETF. Or if you're still concerned, I would still be interested in buying a U.S. 10-year, even where it is. Keep in mind, Bulgarian debt. The Bulgarian 10-year is trading at 38 basis points versus ours at 2%. Now, help me out, Joe. What would you like to own?
Yeah, I like our full faith and credit a little bit more
than Bulgaria.
Bulgaria's full faith.
I mean, that's what people don't understand. And so the foundation is we probably could see lower rates.
Yeah.
Which is going to re-stimulate the economy a little more, but importantly, it's going to create a positive for the mortgage market, and then I do believe global equities will continue to do better. Now, obviously, geopolitical concerns can disrupt everything in the short run, but I still believe the fundamentals over a long cycle is higher equity, and I think people are wrong in de-risking as much as they have.
You've been to Bulgaria? I'm sure you have, haven't you?
No, I haven't.
That's like the only place on the map you haven't.
That's right.
There's a few other countries.
I'll bet you there's some nice spots.
I hear, some parts are beautiful. I'm not trying to.
That's why I picked on them, though. You haven't been there.
Well, no, when I read that.
No, yeah,
when I did a survey of rates, and I said Bulgaria 38 basis points.
I know. Let's get back to our conversation with BlackRock CEO Larry Fink. We promised a quick discussion on the global economy. It's better here, I guess we can sum it up mostly.
It's a lot better here.
Except China, maybe. But there's.
I mean, China grew at 6.2%, right. So let's be clear. I mean, it is slow, but we're all envious of that type of growth. I do believe the trend in China continues to be downward. We're hearing from CEOs that more and more supply chains are moving out of China right now. People are not waiting. Companies are not waiting to see what the outcome is.
So what does that do to China in terms of the trade negotiations? What kind of pressure it puts on them?
I think China long-term knows they have to find ways to stimulate more of their domestic economy. Our economy and most European economies have 70% of their GDP from domestic and 30% exports. China's flipped. It's 70% export, 30% domestic. So they know if they're going to continue to grow, it's going to be domestic. And so the fundamental problems of China, why we believe it's just not growing as fast, is they have a huge retirement problem there.
Larry, has your view on cryptos changed at all? 2 years ago, I think you called Bitcoin an index of money laundering. You remember that?
I do.
Now, okay, so
another broad statement.
So now we have Libra. Yeah. We've also got Bitcoin. Yesterday, I got into a little discussion with Treasury Secretary Mnuchin about the cash or the instrument of choice for money laundering, and it's always been cash, my friend. I mean, Pablo Escobar and the pallets going to Iran, and take your pick. I mean, if you're going to launder money, it's been cash up to this point. So, I mean, Bitcoin is probably...
Or jewels.
Yeah, okay, but Bitcoin's probably, for total money laundering, it's probably 0.0005. So why pick on Bitcoin for the money laundering when it's obviously hasn't been used up to... Al Capone never had any Bitcoin.
So I assume you're also talking about Libra then, too.
No, I don't want to. Libra, I don't even think is a cryptocurrency.
I don't either. That's what I was going to say.
And I don't think it has any inherent value.
Decided it's a debit
and
card.
I don't want it centrally. I mean, and Mark Zuckerberg's involved, and everybody gets to keep the float. All
let's talk about the concept, though.
Yeah.
Forget about who's created it and what it's trying to do.
Yeah.
You know, I was in Europe this past week. I had to buy a new briefcase because mine broke actually there.
When I was carrying cash to launder,
all jewels.
Yeah,
no.
Right.
And when I was going to sign the receipt or the electronic thing, they'd asked me, do I want to pay in euro or dollar?
Yeah.
And I said, okay, dollar. Then I looked at it. I'm still being charged at 3%.
Terrible.
Okay? So, and when you think about all the people who send money, you know, they may work in one country, send money back home. They generally do that through organizations that charge 5 to 10%. Yeah. There is a need, whether it's a Libra or something else, to democratize the exchange of foreign currencies. Today, with computers and electronic market,
there shouldn't be that friction.
It should be 10 basis points, 5 basis points.
That
it's
makes
not
sense.
percent. And so I actually believe the idea around Libra, I don't think we need to create a new currency, but the technology to instantaneous calibrate all the currencies, that should be done.
Who gets squished by that? Who are the middlemen who are making money on that?
The banks.
You know, we're making, as the Bitcoiners would say, that's progress for you, at least to get to the point where you're saying that about Libra. No, you're still not saying anything about Bitcoin.
I think Bitcoin
But
Bitcoin has
blockchain.
Bitcoin
I don't know if Libra is blockchain. They haven't decided. I might do it.
It has to be some form of that.
It's just ledger.
I mean,
right, but it's a basket of fiat currencies. It's like,
but you don't
the
need
crypto
that.
is just keeping track of it.
But there's no inherent value.
But you don't need that. If you had this mechanism in every transaction, you could minimize the transaction cost.
That's the whole idea, right, Larry?
That's what the whole idea is.
I know.
And that's what I loved about it.
Yeah.
I don't believe we need a international currency like that. There's no need. But there is a huge need to bring down the fees of the interchange.
Need or not, it's here. And
So
it's not,
the banks have not wanted to eat their own, to cannibalize themselves.
This is a
but
big
when you see pressure
cannibalization.
like Libra, do they all get on board pretty quickly and say, okay, wait a second, I'm not going to lose my market share?
Or there's going to be some mechanism of doing what I said, the calibration of currencies that's going between that can just, I mean, you don't need a Libra. You have computers that can monetize and calibrate euro to dollar instantaneous for a couple of basis points or yen and all that.
Next time, come for the full hour.
You're evolving.
I got to go talk to my shareholders now.
We appreciate
evolving.
that. It's great to
I
see
see an evolution here. You're evolving and making progress. Thank you.
I'm not a Neanderthal anymore?
No, not as much.
Okay.
You've moved up to your Cro-Magnon.
Oh, good. Okay.
Great to see you. Thank you so much for your time.
Thanks.